What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, Bitcoin is just messing with everybody today. You know, literally, it's putting in all these little mini Bart Simpsons. We come all the way up here, dump down, inverted Bart, pump up, Bart Simpson, dump down. Very, very crazy if you are trying to trade this chop. And it also is kind of concerning people. You know, the fact that we can't seem to break out of this range. Is Bitcoin finally just headed for lower levels? Well, obviously, a lot of people are scared right now with what the Fed is doing, but I do want to talk about what is going on right now because number one, we have another historic indicator that has flashed on the Bitcoin chart, or actually it will be flashing very shortly. However, as you guys saw in my previous video from a few days ago, it seems like no matter how many bullish indicators we get, Bitcoin just can't seem to outpace what is going on with the Fed and what is happening in traditional stocks. Now, definitely you're going to want to stick around to the end of this video because we're going to talk about a lot today, lots of things to cover. I want to talk about something that is happening right now in the stock market specifically, and if Bitcoin does follow what stocks are doing, what does this mean? Because we are having a very, very important moment about to happen. So I do want to discuss that. I also want to talk about the fact that they're saying that the Fed is going to keep raising rates, and they're comparing it to Paul Volcker from the 70s. Remember, he infamously raised the rates 22%. I'm going to show you today why there's absolutely no way that they could ever do that. And if they did, it would be absolutely catastrophic. So they are finding themselves between a rock and a hard place. So that's what I want to talk about. And also, I want to discuss something that a lot of people have just completely, totally wrong when it comes to Bitcoin. So stick around to the end. It might shock you, maybe not if you've been watching the channel. But nevertheless, guys, we have tons of content to go over today. Make sure that you get subscribed. Make sure that you watch to the end of this video. And if you do like this content, well, do feel free to like and subscribe, of course. So the first thing that I want to point out on the very small technicals, because some people are trading out there, a little bit rough if you're trading the daily or the lower 4 hours, right? We got Bart Simpsons all over the place. But I do just want to point out that we do still have, you know, this giant falling wedge right here with the smaller falling wedge inside of it, right? So we got a little bit of an inception of wedges. And yes, I did that accidentally, but yes, falling wedges do inherently break to the upside eventually. Eventually, we are still in a clear downtrend, but you can see that we have actually, let me make this a little bigger, we have actually found support right at this previous support right here of the falling wedge and this previous resistance of the falling wedge, and exactly where these 2 points right here are converging, are crossing over, we are seeing Bitcoin have a bounce at that levels. Now, does this mean that this is a super bullish victory? Well, on the smaller time frames, maybe, but you could see that we have fallen out of this upwards trend, this bear flag, whatever you want to call it. And I did say that around 20,740, which is this dotted area right here, is the area that I would start being very careful, because essentially after this $19,400 area right here, which also coincides with the previous all-time high from 2017. Remember, it wasn't 20,000. It was actually in the 19,000s, depending on which exchange. So this is the previous historic level, and this is the previous high. So some people are saying that this is the most important level for Bitcoin. The previous all-time high is the most important level for Bitcoin. Well, guess what? Those people are wrong. And I'm going to show you why if you stick around to the end of this video. But focusing on the shorter time frames right now, yes, guys, we literally need to hold 19,457, because if not, we risk falling all the way back down into the 17,000s, maybe even lower. So this is a very important level. Now, what we want to see is breaking back above that $20,740 level. And actually, what you really, really want to do is get back inside of this uptrend. And the main level that I'm looking at right here, and you can see where these 2 points collide right here, is exactly at $21,740. So $21,740 is really the area that we need to see Bitcoin break into, hold above it, confirm a daily candle, and at that point, you could potentially look to continue the continuation. Now, if you guys do want to learn how to trade, I do have over $15,000 in bonuses below. Make sure that you take advantage of those, especially during these bear times. It takes like 20 seconds to sign up. I also have an absolutely free tutorial popping up above. I highly recommend that you guys watch that and get subscribed, because there are always opportunities for trading in both a bull and bear market. It's just a little bit harder to trade in a bear market because not a lot of people are good at shorting, and it's a little more complicated, right? You got to play the game of sort of selling the peak, buying back down, whereas in a bull run, you basically just buy and hold, really, and you can pretty much long every dip, right? Stick around. We will be in a bull market once again, my friends. Don't listen to these people that say doom and gloom. The world is going to collapse in 10 years. Been listening to this stuff for decades, guys. It's not going to happen, but it could get a little rough around the edges, a little hairy in the short term, right? So let's talk about this Bitcoin indicator. So obviously we have this area on the super guppy. We know that whenever we flip into the red, it usually means that the bear market is roughly about 75% over. Now, that doesn't mean that we're going to be at a new all-time high in the next year. No, that just means the bear market has about 25% left of it, but then we still have that sideways chop and slow upwards, trend, right? Now, one thing that I do want to point out, this is a very, very important set of moving averages. This is on the Bitcoin index chart, okay, which is an accumulative chart of all the prices. And that is essentially when you have the 50, right, which is this purple right here, you have it crossing under the 100. Now, technically, this isn't really a great thing because you really want to see the 50 crossing above the 100, but ultimately, when you do have that, it tends to mark the fact that the bottom is in. Now, you could see, basically, the next time that we have that cross, so the inverse, the 50 crossing above the 100 or the purple crossing above the blue, that marks that we have definitely begun the beginning of the bull market, right? But there is a lot of middle ground. How long does it take from that, signal flashing until we get the second flash again? First time was 400 days, which means that it still took over a year before we had Bitcoin, getting back to these previous levels right here where it was consolidating and then having that breakout, right? But nevertheless, this came in and we did have those lows, right? Now, I know what you're saying. This time is different, right? I'm just pointing it out. I'm just trying to be objective here. Look, guys, we had it again back here, February 11th of 2019. Was the low in? Absolutely. The low was in. We were, at the tail end of the bear. We still weren't out of it just yet. And what's crazy, this is actually nuts. This rally that we had right here, this was a bit of a fake out rally. When we went to 14,000, because we really went up a little bit too quick. We ended up coming back down, but look what happened, guys. As soon as we had that cross again right here, that really confirmed the trend. Now, I know what you're saying. We crashed down here. Guys, this is the COVID crash. If you just cross this out, just cross out COVID, right? What do you think we were going to do? What do you think Bitcoin was going to do? Look what we were doing, right? We were going sideways. We were treading sideways between this area, right? That's what we were doing, but COVID screwed it up. If you actually take COVID out, look at this. Very, very obvious M pattern forming. We fell through because of COVID, but nevertheless, how long did that take until recovery? Well, and stick around, guys. We got a lot to talk about in this video. Don't get bored. Don't click off just yet. Timestamps below if you want to see something else. But look at this. From that until the signal was 301 days. So I think we can kind of assume at this point it's going to be about a year. Okay, until we really start to get back into that slow grind into the bull market. So no, I would not anticipate any new all-time highs for Bitcoin for at least a year. But zooming in right here, look at what we're about to do. We're literally about to have them cross. They haven't crossed just yet, but I mean, they're literally going to cross, this week leading into next week. So they're definitely crossing. And, historically speaking, it's always been the bottom. And it's been about roughly, give or take, a year until we really started to break out of the full downtrend and continue to the upside, right? So I just wanted to point that out for you guys if you're interested. Now, talking about this pattern that we're noticing right here on the S&P. Now, first thing I want to point out is the S&P is right now, again, hitting some very important support. It would be nice if we could bounce up to the top of this level. And obviously, breaking this downtrend would totally end, in my opinion, the bear market. Is that going to happen? Well, one thing we do know is we have this 200 weekly, which is, always going up over time, very long-term moving average. So eventually, at some point, we may run into this again and bounce off of it. You could see historically, obviously, COVID crash doesn't count. As I said, ignore that, right? But, all these other times historically, you could see we have that bounce, we have that bounce, we have that bounce, excluding COVID, still technically bounced from that level above it. And here could be happening. But here's the big kicker. Look at this pattern that we are forming. Now, remember, the longer you stay in a pattern, the stronger that pattern becomes, right? If you're having something on like a very small time frame, okay, it has a little bit of relevance, but this pattern, you could argue from this top has been happening since December of 2021, and this is a descending broadening wedge. This is on the S&P, remember, that's what we're looking at right now. Now look at this, if you just do a simple Google search, just type descending broadening wedge in, that's it, go over and look at these results. What ends up happening with the price on a descending broadening wedge? Look, Price breaks out, price breaks out, price breaks out. Now, yes, here you go. It can come back down to the bottom, right? Now, this is what's a little bit scary. If we do have that fall, right? Let's say, we have 3 touches to the top right here, right? And a little bit more, you could say 4, maybe 4 or 5 touches to the bottom, whatever, depending on if you take the wicks or not. But, it is scary because, yes, we could end up coming all the way down to here, right? And, just pointing it out, if we were to go down straight, that would be another 15% fall for the S&P. And we know that whatever the S&P does, Bitcoin tends to do 2 to 3 times worse, right? So if the S&P fell 15, does that mean Bitcoin's going to fall another 45, 50%? It's possible. That is the warning. However, keep in mind that we might be held by this 200 weekly right here. And even if we do fall, according to what we do, we usually then have that massive, massive breakout. And it does continue to the upside, as you guys can see in all these examples right here, right? It always breaks to the upside. And actually, if we had an ascending broadening wedge, if it was going up, you would look for a break to the downside, right? So I just wanted to point that pattern out. That's actually a bullish pattern, but it's not a short-term bullish pattern. It's a long-term bullish pattern, right? You have to actually kind of wait and sit this one out. Now, getting back to crypto, just wanted to point that out. Could be bullish for both Bitcoin and stocks. You can see right here, this is the most important level that we have to get, right? As soon as we break this downtrend, that is essentially when, you could say that maybe the downtrend, the bear market is over. Until then, all we can go by is just what we have right here. We do have the green MACD, and we may be putting in a giant double bottom, which is also a bullish pattern, right? But big elephant in the room. DXY. Now, speaking of breaking a downwards trend, I just want to show you guys something technically here so you can understand what I'm saying. You can see that ever since right here in March of 85, which interestingly enough, Paul Volcker was still in office at that point, right? You can see right here, we did have this super, super, super strong dollar going up to 164. And then you can see this line right here, rejected. But look what happens once we broke this line. And this is what I'm talking about with what Bitcoin has to do. You can see right here, as soon as we broke that, right, we held it as support, and then the dollar ended up going on this parabolic run. Now, the dollar is currently reaching a very critical level of resistance that we haven't seen it break above. Number one, we have this blue box area of support. You could see lots of interactions with this area as resistance and support. Only a handful of times, or 2 times specifically, we ever broke above it. And now we also have this resistance right here, resistance, resistance. So we have these 2 resistances crossing right here. Whereas, we had the opposite for Bitcoin. Bitcoin was actually finding support on those levels. The dollar is hitting resistance. Now, will the dollar continue to climb? Will the Fed maintain their hawkish stance? Now, I know you guys already saw this video that I put out, but if you didn't, I'm going to play the clip again because I need to drill it into you guys. The fact that the Fed cannot continue to raise rates. This is why.
Fundamentally, if you zoom out a little bit, the Fed can't raise rates to whip inflation here without basically bankrupting everything. There is so much debt in the system, both at the sovereign and the corporate level, that if you allow rates to rise, people become insolvent really quickly. So the only thing that we can actually do here is actually an inflationary pivot here.
So I don't mean to play the same clip again. It's just I really want to hammer home where the Fed could potentially be taking this. Now, during his speech, Fed Powell, he actually said, he was talking about Paul Volcker, right? And he's the former chair of the Federal Reserve. And you can see right here, he was the 12th chair and he served from 1979 to 1987. Now, during that time, he actually raised the rates all the way up to historic 22%, which is insane if you think about where we are right now. We're nowhere near that. We're incredibly far away from that. However, inflation is the highest that it's ever been in over 40 years, right? But interestingly enough, if you look at the time that Volcker actually did raise the rates, and you have a look at just the S&P, for example, so this is when he took office in 79, and this is when he left in 88, stocks actually did well during that period. Very interesting. Why is this? Well, it's because we are living in a very different time. And I got to hand it back to Nick Carter. He explains why it was different in Volcker's era.
So if you look back at the 1970s, when was the last time we had inflation this bad, Paul Volcker raised rates to 20% or thereabouts. And that was a contributing factor in, containing inflation. Now, if you raise rates to 5%, the U.S. government would default, right? Because our debt to GDP ratio is 120 as opposed to 30 as it was back then. And our deficit is around 7% this year as opposed to 2-3% as it was back then. So the system cannot tolerate rising interest rates. So I don't actually believe that the Fed can sort of carry out their stated agenda. I know they're talking really tough.
So I'm just trying to hammer home. Obviously, he has a lot more experience, than most of us, than I do, right? I never looked at macro stuff. I don't run my own, venture fund and all this stuff. I'm just a guy on the internet talking about what I'm seeing and how I feel about it. Remember, nothing on this channel is financial advice. It's just my opinion. But I do appreciate the opinions of others. And James Lavish was over on Priston Pish's, I guess this is a podcast that they do, and he's talking about why raising rates might make the problem significantly worse. If the U.S. government rolled over its debt at just a 3.2% interest rate, its interest expense would be $1 trillion, which is $600 billion higher than its annual interest expense today. They say it's just math. But watch this interview and look at the interesting predicament that they could end up putting themselves in.
If you look at where we are now, and then you tack on the fact that interest rates are going up, let's just say, and you can look across the yield curve right now, and everything's right about 3%, right? So if the government's going to issue debt, it's going to be at about 3%. Let's just say it's at 3.2% to make the numbers kind of round here. If you use 3.2% on the $30 trillion of debt that we have currently, and we have to replace that over the next number of years, that's $1 trillion of interest expense. That's $600 billion more than we have at our current rate of $400 billion.
The number goes up so aggressively with just even the slightest change in interest rate that I just don't think people understand that we're not dealing with a linear type situation right now.
Exactly, and that's the problem. So we're watching the Fed kind of squirm, and they know that they can't raise rates too high. So they've been trying to do is raise them quickly without breaking the markets, because that's just one part of it. But as our markets go lower, their tax revenues are going lower, right? The government's tax revenues are going lower. So you have lower capital gains taxes, right? As the interest rates go up, it squeezes margins for companies. So their corporate tax rates are going down. Individual tax rates are going down as we enter a recession. And so now you've got a situation that your interest payments are going up and your tax revenues are going down. And it's just a spiral. There's no way out of it. So I don't think that we're in a situation, Preston, where the world is ending for the United States through the US dollar tomorrow. That's not what I'm saying. But I'm saying that if you look out, there's just no way out of this trap.
What an interesting concept. So I never considered the fact that if they continue to raise the rates and markets continue to crash, then that would mean that a lot of people are clearly not making money in the stocks right now, which means there is no capital gains, which means they are tax loss harvesting, which means that the government's actually going to receive less tax. Like, it would be better. You understand what I'm saying? It would be better if stocks were going up, because then people would be cashing out capital gains, and then they would be taking their 50%, right? On top of the fact that, they're discouraging, borrowing and all that other stuff. But like Robert Kiyosaki said, 2008 was a great time to get rich. Everything went on sale. He says there was a bigger crash coming. That crash is here. Millions will be wiped out. Please don't be one of them. It's not what's in your wallet. It's what's in your head. All markets are crashing. Real estate, stocks, gold, silver, Bitcoin. Middle class wiped out by higher oil inflation, yet rich are getting richer. Difference in head, not wallet. Change what's in your head first, then get richer. Now, obviously, a lot of this is about mindset and all that stuff. And I agree. You have to visualize, you have to see. I'm all about visualization and getting your mindset right and all that other stuff. But I think the real thing to take away from this is, and Robert Kiyosaki, he is not, trust me, he's not been right. He's been wrong a lot of times. He's been calling for this crash for pretty much 30 years now. But nevertheless, he does make a good point here. And, everyone's trying to time the exact bottom. Like, maybe Bitcoin goes down to 12,000 or 10,000, right? Which, stick around, I'm going to tell you why that's probably not going to happen. But, nevertheless, it's a good time to buy. And you can see right here, eCoin Metrics points out Whale addresses that control 1,000 to 10,000 Bitcoin, not dollars, Bitcoin, 10,000 Bitcoin, are starting to accumulate coins on chain again. For sure, that won't cancel the bear market, but apparently some people do love buying Bitcoin at around these prices. So could Bitcoin go lower? Of course it could. But historically speaking, this is the absolute best time to be buying when you're at these 70% discounts. Now, one thing I just want to say before we go, and this is a big misconception, and this is what a lot of people have wrong. A lot of people, and look at this where the chart is right now, by the way. Look at where we are sitting exactly today as I'm making this video. Bitcoin, look where it's sitting. Perfectly right here at this top, right? You can see. And that's where we're hanging out. And everyone thinks that this is the most important level because this was the $20,000 dollar top for Bitcoin. But actually, if you look historically, there's nothing else significantly there. The most significant levels are actually the monthly closing candles. Now you can see where we wick down and close this candle right here. That candle closed at $13,899. So let's just make it a lot easier. Let's just say 13,900. And depending on what chart you look at, some of the charts are 13.8, but 13.9, let's say, okay? Or even just 14 if you want to round it to 14. Nevertheless, this is the most important level. And the reason is because we've had 1, 2, 3, 4, 5, 6 candles that have interacted with that level. How many have interacted with the 20K? Well, we have this wick, which really technically doesn't count, right? We have this, which really didn't do anything. I mean, we had this candle, it just closed down and went up. And then I guess you could say 1, 2, 3, right? So 4 versus 6. And really, historically, this is where the area is at. Because, if you put on the VPVR, let me just show you something else real quick. Let me put the VPVR on. Do I have it in here? Yes, I do. All right. So let me get out of here. All right. Let's go to this, because obviously there's a lot of buying. Look at that level, guys. So if you look at the VPVR, and obviously it's a little ridiculous looking how big it gets. But essentially, you can see right at this level, I don't know if you guys can see behind me, that is where the VPVR just falls right off a cliff. Completely falls off a cliff. And look at all of this down here, right? That shows you that this is a lot more significant, than essentially this right here, right? So that's why I think a lot of people are wrong. And I'm not saying we're going to go lower, but I am saying if we were going to go lower, then the level to look for would be 13,900. It wouldn't be any lower than that. So that's kind of like my optimistic worst case bearish objective scenario is that, could Bitcoin come down and retest it? Maybe. That personally, in my opinion, would truly be flipping that previous level, right? So just pointing that out, guys. And I actually do want to end on a little bit of good news today because I don't want you guys to think I'm bearish. I'm not bearish or anything like that. But this is actually Mt. Gox news. I also tweeted this over on my Twitter this morning. Make sure you guys follow me on Twitter at @TheCryptoZombie if you want to get the news quicker. Or you could just wait for the video to come out. But if you're on Twitter, you would have already known about this. So nevertheless, Mt. Gox repayment has been delayed. So assignment restriction reference period has been accepted by the court and will start on September 15th. And it will end at an undefined period. Notably, this does not imply that payouts will actually begin on September 15th. It just means that they're going to start the process. But according to Django Bits, who's an alleged operator of a channel for Mt. Gox creditors, this process of repayment could, quote, drag on for months, if not years. He says, as mentioned before, the trustee is not yet ready to pay out. There will be a KYC process. He has to explain how payouts will happen, etc. He has to collect bank account data, and so on. This will drag on for months, if not years. Nothing the trustee does is quick. So we had that emergency video where they said they were going to be releasing it. And then we had, creditors coming out saying, no, this is fake news. So it does look like they are starting the process September 15th, but it could potentially drag on essentially for months to years. So that being said, guys, having a look at what Bitcoin is doing right now, we are still hanging on by a thread here. These are very dangerous levels. And obviously, if we do lose this uptrend, like I said, yes, first level, very light level at around 18,900 maybe, but you may come back down into the danger zone. Really what you want to do is get back above 21,742. So if you guys are trading, do be safe out there. This is a little bit scary range to be trading right now. I would kind of wait for confirmation on a break to either side. But if you guys do want to learn how to trade, make sure that you check out the tutorial, which is popping up right here, right now. Thank you for stopping by. Let me know what you guys think. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. And of course, peace out.